Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Friday, March the 13th at 3:15 p.m. Pacific Daylight Time. The craziness continues, but I'm narrowing down counts, and I've been talking about them, and today the low actually crossed over a line that it shouldn't have, which kind of invalidated the labeling as I had presented it. So far this week, we basically have taken out two uh, from what the possibilities would have been. So, with all that in mind, it still kind of leaves two possibilities, but the one that I will be presenting once I get through this larger picture here is again that the top is in and that we have started down in what I'm likely going to be labeling the minute wave one of minor wave one, intermediate wave one, etc., as we unfold in a cycle degree fourth wave. Now, as crazy as the markets have been, what I don't really want to spend a lot of time discussing today, because we all are responsible to be keeping up with the news. We all know what's happening between Israel, United States, and Iran. We all know that it's expanding. We all know that the Strait of Hormuz is having a problem. We all know that some of the container ships are being hit with drones. We know the banter going back and forth, et cetera, et cetera. So, but what we need to really know is the math, because to be honest with you, right now, what's trading and how it's trading is according to gamma, according to how the options are trading, according to where they intend to pin things from today, because it was a Friday expiration. And then also all of the individuals it turns into a Friday expiration. And we find it very interesting how they started to how it ended. So both sides got the chance. And I think a lot of it was the dealers themselves, not so much the larger institutional traders, or just regular larger traders or regular traders. Um, and the reason I'm saying it like that is because initially the market ran up. And in fact, I think it popped to a slight new high over what we saw for this downside sequence that's been in motion. So it kind of went a little bit higher. And then it just started to sell off and just started to sell off, and it kept selling off and kept selling off until we broke to a new low below what we had put in, I believe, yesterday, actually. So it invalidated that count. So my thoughts are what I really want to present today is the math. Let's talk about the math. Let's talk about the count. Let's talk about the potential for what the market still can do, but what's laying likely directly in front of us. If people want to tie in everything that's happening around us, that's fine. Because you're right, it is going to have an effect on the market, but it certainly isn't going to speed it up or produce a crash tomorrow or on Monday or any of these other scenarios that are constantly being swirled around. We're going to have some serious downside without a doubt. Without a doubt. That much I can tell you simply because the wave count will dictate it. And the breaking of certain levels, certain gamma levels, certain volatility triggers, et cetera, is also going to come into play. Now, as will upside moves too. Now, so if we have an understanding of Elliott, if we're now counting to the downside, we're counting that we've started on a corrective pattern down that's on a cycle degree. So if we've started a cycle degree fourth wave, what's going to be inside? It's going to be an ABC of primary degree. So now let's say that we're in primary wave A, very beginning, but primary wave A. So all on the same screen, whether it's an hourly, whether it's a 4-hour chart, I can see that all-time high and I can see today's lows. So what degree do I think that we're really kind of coming down in? Very possibly just something like minute and maybe even minuet. So the counting of the waves that I'm doing is in minuet, but I'll go over that in a minute. So my point here is that as we get larger in terms of the wave count is showing us that we're moving out of minor wave one and we have minor wave two, but we would be in a minor third still of the intermediate wave one or the intermediate A wave. Those are all the possibilities. Because what are we looking to finish? Our first move down should be completing intermediate wave A of primary wave A. Now, I believe that this area right in here is where we're likely going to see that primary wave A come in right here. And then we're going to have a primary B wave, and then we're going to have a C wave. And then as we know, C waves are destructive, particularly when they're coming in where this one likely will. So if we're really looking at a crash, at a collapse, at something very severe, I actually believe it's going to come in the C wave. And it would be a primary C wave. So we're going to have other strong downside moves. Don't get fooled. And they will also be very dynamic and very destructive. But the true, as this was labeled, this actually was the NASDAQ. I know it's the S&P, but it was really the NASDAQ that carried it lower. And then we rallied and almost, I think we did actually go equaled the high. And then we came flying back down, making a new low, but still basically in an ABC flat. And it contained two very strong downside moves. But in the whole picture of things, it's almost a flat. So here we are going to be up here, and we're going to be doing one bigger. Right? This was primary degree. We're up a level to a cycle degree. And we've not really seen, I mean, we can go further out, but some reason my computer no longer, or Thinkorswim no longer gives me past this 1983. But that's the ES actually came on in 1983. Let's do one favor. Let me go back over to the SPX and go back again. There we go. This is the one I want to see. So there is that fourth, and that's where I'm looking for the cycle fourth wave to come into this box, and most likely towards that low. So I believe it will be the C wave. It'll be the primary C wave down of cycle wave 4. That I think will be the most destructive. Now that may be at the tail end of obviously of this larger move. But how quickly we get to that point is really in question now. So again, what I really would like to do today is just review the account as we have it and then really discuss the math. The math of the options trading, the math of the gamma levels, the math of what we have coming forward, what we have coming up on March the 31st, and what we might expect coming up to that level. What we have next week as the futures roll out to the June contract, as next Friday, the 20th, is believe it or not, talk about going fast, the March expiration is next Friday. So it's first of all, it zips right by. So the futures here, and I discussed this, is that what's going to start to present a more confusing picture, which is why I really want to focus on the cash market right now, because that's constant. That's price, that's pure price, and that's calculated by the underlying. So all those stocks as they're trading are going to filter through and get calculated by weighting, because it's a cap weighted index, into what the price of the SPX is, or S&P 500. The futures market is also based on that S&P 500, but it is calculated with premium. Why? Because it's a future. So it we're really what you're when you're buying it, you and you're buying it for June, there's interest between now and June. That's called the premium. The premium decays as we get closer to that expiration in June. As we get closer to March the 31st, the the SPX, the premium in the SPX is down, I believe, to like $4 or $5. Whereas when it began, it's more like 58. So again, I think I said I think by Tuesday, Thinkorswim may have already rolled out, definitely by Wednesday. And usually how that happens is they may just do it first, but I've always played by when I see the volume in the June contract being greater than the volume in the March contract, I'll flip with everybody because trading the March will become a little bit, could get a little bit out of control as people that either have to get out of the futures or choose to roll uh, have a little bit more, excuse me, have a little bit more difficulty in doing it. Not so much in the June contract, but more in that March contract. Because if you need to buy it, who wants to sell it? If it's going to expire, and then you've got to deal with, the settlement of it because it all settles into cash. So I think a lot of people want to get that all put into a nice, tidy spot prior. So again, though, once we start with the June contract, it's going to, well, let's just take a look to see what we have right now. So here we have, I wanted, well, no. How about this? I'm going to go to the ES, and this should show me the future as well. Come on. ES. There we are. So we can see that right now the June contract has $50. $50. So it's 66.25 and it's 66.75. So it's $50. So, but you can see that here the SPX closed at 66.32. The future closed at 6.25 because it trades an hour more than the cash. So what they really were doing then, folks, after the expiration, they were selling the future. And that's likely just to get flat, just to get delta neutral, just to get whatever the position required. They may have thought, oh, you know what? I thought I was not going to be this long or whatever. So they sell. They sell some of the futures out. But right now there's $50 premium, and that's the point that I'm making. And the further out you go, that premium pretty much doubles. So back to the SPX. And I just want to go to the chart. Thank you very much. So back to here. So where are we? Well, here's the start of that cycle wave 3. It started in 1949. This is my analysis. And so therefore it has been a long time in the making. I'm going to dare say most of us were not born yet when this third wave started. 1949. I know there's a lot of people that were. But I came along not too far after, but after all of that. So we need to consider that time factor. So we start to use Fibonacci time sequences, right? When we're thinking about that, we're going to have a cycle degree correction. And cycle wave 3, since it's a fourth wave, cycle wave 3 took 76 years, 77 years. Now, we can make comparisons to cycle wave 2 to cycle wave 4 and say, wow, they don't match. No kidding. They don't. But did we see anywhere rallies this size and this size? No, we haven't. So, but if we start to move ourselves out, this has been a growing market. we came off of a depression low. And so it's just building, 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 and then it expands and it expands. So the wave count expands because we're already taught that within a third wave, there'll be five waves plus the third of the third usually will subdivide into its own five-wave structure. But then so can wave one, so can wave five. So you can have extensions on top of extensions on top of extensions. And next thing you know, you've got a what you might want to call a monster wave. Also, economically, the country this was rebuilding, and we were the only country after World War II that didn't suffer the war on our own land within the United States. So we were the best choice to provide reconstruction, to the best choice because the factories were still here. They just need to be retooled from producing bombs and jets, not jets and planes and tanks, etc., for the war, back to manufacturing possibly farm equipment, cars, different things that could be brought over to the devastation, etc. So the reconstruction, the rebuilding, and that is what gave us this. This whole thing, I know I've gone over this before, but I want everyone to really understand that not only is that good because there's the 1929 high, there's the 1932 low. So there was like a double crash in there. There's the first one, then we rallied, and then we got this C wave. Seriously, we're talking, it was total devastation, total wipeout. So, but the height of the market then was, I got to get over here. It's more than that. This wants to tell me these crazy numbers. Oh, this is the S&P. I'm so sorry. So, but we're talking about the S&P then at the height of 1929. The high was 2888. Now this was not even the S&P as we know it today. It wasn't even the S&P that we know. The S&P itself, the future came on in the 80s. The SPX really began to evolve. I think it was in the 50s. So that would have been back in here where we started to get more companies and we started to see a lot of effect that the market started to move. So here, what was that low in the S&P 500? 447, which is pretty wild. So we have to think about in here, this is after the Second World War. It was well done, but we got back down to $14. So it took a while for the country to get back up on its feet. And therefore, but to really start to pick up to rally. So considering the rule of alternation, considering the look and the feel, it's very difficult to apply it on this chart. So we have to go by the fact that, no, that's what happened. This is the labeling. And this is what we've done thus far. So if I'm looking from that point there to count up five, there's one, there's two, there's three, there's four, and we're in the five, and I believe it's done. I have thought it's been done for a while, folks, but I have to continue to follow the math and say, well, maybe we have that shot at one last new high. And believe it or not, it's still there. That possibility is still there. Now, the probability grows a little bit less and grows a little bit less, but the market has already shown that you guys can be off at war and you could be doing all that you're doing, and we're going to pull a rally. And we're going to go up. And we also are going to go down. And then you're going to swirl around all the talk about the Iran war, all the talk about oil, all the talk about all the stuff that can happen that can create a market to just explode to the downside. Now, those are all real things, and they should have an effect. But we've been watching. Like for today, for example, AMAN, they just produce things that go into the chip production, that go into all of that. It's up $4. Why? Because it was an expiration today. Not because they got some great hopes or, they're going to be the new, leader of the pack. I doubt it. So again, we just see things come in because it's the way the trade is going. So that's why I present both sides. That's why I will talk about that. Yeah, we have the potential. We could go back above 7,000. I don't want to say anything negative right now, but yes, there's a strong possibility that this is all done. And I'm going to show it to you again today. And if that's the case, then we need to run from there all the way up to wherever that high is, because that's where we're going to show. And you're going to see how most of what of it is going to all be done right up into here. Right? And let me just say, I'm going to go here and I'm just going to draw that. And I'm going to put it so I can fetch it. That's up too high.
Whoops.
So let's just say,
whoops.
well, I don't know which one it is. Retracement one. I'm going to have to, nope, I just got to get rid of it and start it over, folks. Stay 1 second. I know, but I want to show you this because this is how actually Elliott and Fibs continue to work, because here we are. I want to be able to find it. Come on, there. I'm just going to put it there and then I got to go find it. Let's go down to that daily. There it is, but it's over too far. No. Geez, Louise, come on. There it is. And I want it to go right there. Yep. So, okay, we're going to put it right there. And now you can see, but I think the downside came flipping up as well. Yep, it did. So let me go readjust that one and put this guy back down there. Okay, now we got it. Come on. As best we can. So see, what my point was, it's like we're way up here and down here is safe. But we do have that possibility. That would be the call to go to the previous fourth wave. But it may not. We may get into here. I do not suspect that's 100% is all the way down there. So very top of it gets into the price territory of the previous fourth wave. I think it'll get deeper, but I just want to start discussing the math. And the math of it is that off of this large chart, we do have fibs that'll take us back to that previous fourth. Not all the way down here, but within it. So let's start to take it down, and we'll keep going. So within cycle wave 3, 5 waves of primary, 1, 2, 3, 4, done. We're in primary wave 5, likely complete. That's what I'm going to be showing today. So I'm going to bring it back down to here. Now, this is where I think primary wave A, very possibly, even it could be even minor degree, this we get to. This is going to be what I think would be our first big stop. The absolute first is going to be this low, and that's April of 2025. So I think we can get very fast down to here, and that might be minor wave 1, as I was talking about before. Maybe a little bit higher, but that minor 1 up would be intermediate wave 1, and I don't think so. I think it could be like minor wave 1. So we're going to have 5 waves of minute degree coming down. Same way we had 5 going up. See, there they are. 1, 2, 3, 4, 5. We have 5 coming back down. And we may get right back to there for minor wave 1 of intermediate wave A. I don't think it's going to be intermediate wave 1. I think intermediate wave A comes down into here. So that is 3,500. Rounded up. 3,500. We're still trading at 66. 3,500. So that's 3,100 points away. That's a pretty big drop. And that's not the whole correction. So let's keep walking this down. Let's come down to the daily. Minor wave 5. So now we're down to that the minute rally, the minute degree. There's 1, 2, 3, 4, and 5. And this has bounced from being minuet wave 1 of minute wave 5 to being minute wave 5. And that's about all I've ever put up there. So either it had more to go or it was all done. I'm back to being that it's all done, and I'll tell you why. And it wasn't because of what I see happening outside in our world, in our country, economically. It all comes into play. No doubt it all comes into play. But we have to wait for the numbers. And there are going to be times when the market isn't really going to pay attention to the numbers as hard as we think they should, or they'll be misinterpreted, or they're getting talked around, or. So I'm going to try to keep it to the math. When I'm doing a count that shows that we can go up, that's until we start to break certain levels. And that's how I'm discussing it. When we break a level on an Elliott basis, it negates that labeling. So this is the daily. So everything here remains the same. Where the change is going to come is here down. And I'll show you why I changed how I was counting it. A couple of things I'm pretty big on. I'm going to go right to that 4-hour chart, bring it in. So this is the 5s. And now we're going to start to come down off of there. Now, there is the minute fourth wave, minute wave 5, coming down in minute wave 1. And it is breaking into a triangle pattern, a diagonal to the downside. And you can see how it's kind of forming there. Now, previously, I had labeled this as minuet wave 1 of minute wave 5. So that being the case, this had to be minute wave 2. And right here is where I placed it, to how it was being counted down, that this would have been minute wave 5. Now, unless I'm intending to once again, so I put the minuet wave 2 here, and that would then say for the upside, this was 1, that would have been 2, we needed to rally. We did. Then we came back down, and that looked okay. Here was today. No, I'm sorry, that's not today. But that we started to pick up the rally. So I thought, okay, this is going to work because we can come down. That'd be 1. We can come down in a wave 2. We actually could come all the way down, which is pretty much what we did. But what I said at the time, so this would have been labeled as wave 2, and this would have been wave 1 of minuet wave 3. That the correction, if this is going to be wave 2 of 3, then it cannot break below the starting point of wave 1. And that starting point of wave 1 was 66.36. And the low today, again, in the cash, was 66.24. I'll round it up a few cents, 24. So that was enough to me, and it closed below. It closed at 66.23 was the 23.92 was the low. 66.32 was the close. This marker was 66.20, 66.36. So it closed below that low. And that, to me, invalidates that this was 2 and this was wave 1 of the next rally phase up, the wave 3 rally phase up. So I mentioned it this morning. I said, if we break, that invalidates the count and brings forward the next, which is right now, I could say wave 4 still has a shot. And that is going to be, that low is 65.22. So it's 65.22. If we're looking for still an upside, then it shouldn't break that level because that's the fourth wave, and whatever we're going to be coming down in shouldn't be looking to break that, but it could if we move the 4 over. So in other words, this could be minute wave 4 still be in process. This, friend, is November 21st of 2025. So it actually would put that the fourth wave started at the end of October. So we have November, December, January, February, 4 months and 2 weeks into it. We're still in this minute fourth wave. Like, yeah, we could be, but that would suggest that this is A and this is B. B is slightly irregular because it goes to a new high. And then this has to be 5 waves. Now, yes, yes, it could be, but it would have to be a C wave, which it could be, and it could be a diagonal, which it could be. And I'm going to tell you how I would allow it. We have 1, 2, 3, because we had a little bit of a B wave that made its own deal and was slightly irregular and ended in a truncated C. So this is the market that we're being dealt. I wouldn't necessarily be looking for all of this in a stronger downside move. But as I've been telling you, my feeling is that the market is totally non-committed to having to roll out or change the whole structure of their trades. We've been running on risk-on trading basically since the October 2022 low. And risk-on being you selling volatility and buying the implied volatility or buying the volatility of the underlying stocks within the SPX and also the SPX. So everything, the call is it's like you're buying. And so the hedge from a dealer is they're buying. So that's kind of been the plan or the way the trading has gone as long as we remained in that channel to the upside. It's risk on trading. Well, right now we're seeing how several times we'll be breaking volatility triggers, go down below them, everybody gets all spooked, we start to cover a lot of gamma, and then suddenly it stops. Volatility comes back down. They resume that trade. I think it's because they don't see that things are going to shift because they haven't yet. So what I mean by that, it's like you can draw a big box around where the market has been trading, looking then to turn higher. So there are certain levels, even on a fib basis and on an Elliott Wave basis, that if the market starts to break below this level, then it should shift the box. I want to call it a box because it's like if we're looking at a box where it's trading, it's because of where gamma levels are, it's where volatility triggers are, where call walls and put walls that tend to get moved. So the market continues to trade towards that structure, towards an upside move. So what I'm looking for is for that window to be shifted down to see where they're going to start dropping put walls, are going to start dropping and bringing down call walls, bringing down everything to a lower level. So when things shift lower, then to me, then we're going to get a cleaner sign that we've just moved back into risk off trading. And so the hedge to risk off trading is to sell. So we're just really taking on this thought of a process of like, well, what do the dealers have to do? The dealers are the ones making the markets out there for all of us to go in and trade. So what do they have to do? If you've got retail and a lot of institutions who just feel like we're going to 7,000 and they're placing their markers up there. There's a whole bunch of money sitting all the way up there, folks. All you have to do is go look at the open interest in the calls and in the puts. So as it gets closer, all of that gets activated. All of that comes to life on both sides. And as it moves, both sides become activated until they expire. March the 31st is the end of the first quarter. March the 31st, I believe, in my view, is going to tend to be I think it could be a very explosive expiration. And I think it could be explosive getting to it. Because I believe what will be happening is we're going to see a lot of changing in terms of rolling and establishing positions far enough below, putting markers down below. So that's what I'm waiting for. And then not that it makes it easier to do the math, but the math will start to make more sense. To me, it was like when they're shifting a call wall, like they've been doing in the SPX, they're shifting it from 7,000 to 7,100, 7,000. I want to shift it down. Shift it down. So, if we get lower, we're at 6,600. Can we shift that down to 69? Can we shift it down to 68? Now, come the 31st, JP Morgan rolls their collar. Now, most people don't want to pay attention to this, but I do. Because not that it's written in stone, but I want an indication of where those traders, who in my mind are pretty stealth, they're pretty stealth to get the trade off that they get off without anybody noticing. And I mean that sincerely. So I will want to see, what do you guys think? Everybody goes, well, they're normally 3% up and down. Well, what if it isn't? What if it's changed? Is that a signal? Are we then getting a cleaner idea about that's a big bank that's got an awful lot of money and they trade an awful lot and they've got to hedge big hedge funds and they're hedging it down. So they're moving that window down, the hedge window down. So they hedge via calls and puts. So that's what I'm looking for. That's actually where I think the market is building to get to. Now they want to go test. They want to go test, the puts. Where are those 35,000 puts of JP Morgan? Let's go test them. It's like, come on, do you really think that that's going to get those traders all worried? Trust me, it won't. But it's going to be an interesting, because where are they going to put it? Are they going to adjust it lower, which will pull the calls up? So here we have it. Okay, so that actually will lower the calls. Sorry. Puts get pulled up or moved deeper, and the calls come down as well. Okay, so that's a big thing that I got that in my mind that I want to see. Where are they going to do this? Sometimes the market totally ignores it. Now, what's going to add another whole little layer of confusion? Tuesday, maybe Wednesday, maybe even Monday. I've seen a Thinkorswim now do it as early as Monday. The contract in the ES will roll out to the June contract. And there we will have at least $50 premium sitting in there. And as I just showed you, you're looking at $50 where the future closed at 66.25. So you got $50. So the June contract closed at 66.75. Well, 25, 50 points is 50 points. If we rally 100 points, it's going to move that up 100 points. So that's the contract that's trading. Then you got the spiders. Then you got, et cetera, et cetera. So interestingly enough, if we're going to start working on getting gamma, then by, that it's going to be more risk off trading, which could be nothing more than they're getting out of March and putting it somewhere else. There are a lot of things get rolled, and we're going to see all of that. Then it gets factored in again. So we got work to do, but I think it could be more consistent that they're going to tack the war onto it. And fair enough, it should have something, it has a word to tell us. It is not a good thing. It costs a lot of money. Every single day, we're shooting things and providing arms and doing whatever we're doing. Plus, a very expensive refueling jet crashed. Unfortunately, I believe 5 service people lost their lives. But there's cost. There's cost in all this, human cost, dollar cost, and that's going to come out of something. So yes, there are those things that go into all of this. But I think that it's more when you're trading, you're trading dollars, right? And it's going to be put together with hedges, with rolling, with taking things off, because that money has to continue to trade, or the rest of us would have nothing to do. So this is an important factor for our market, is that all of this needs to continue, and I don't see it ending anytime soon. As long as the printing presses are going, as long as everything's functioning, as long as business can continue to be okay. If we get a greater disruption because of the war that's going to smack the economy, well, we're going to trade lower. That much I'm going to tell you. But I can't stay focused on, oh my God, what's happening to the world? Look at all this money is flowing out. It's like, yeah, and it better be flowing into some of it into my hands so that I have for when things really get tough, right? I mean, that's what trading is. Because if it dries up, we won't be having any ranges like we have. The volumes, I think, would go really start to shrink, and we would be rolling around a lot lower than where we are. So what's my point? My point is that I think we could be on our way down, but there's going to be a lot of trading. We need to remain smart. I'm not going to be like, oh, this is that and that's that. No one's paying attention and I'm calling it. It's like, I don't care. More importantly, it's like, what do you do? What are you doing? How are you trading? Are you like sitting, waiting? There's a lot of trading going on, folks. I mean, a lot of trading in all kinds of things. Go check out the dollar value that gets changing hands in our markets on a daily basis. It's a lot of dollars. So I'd rather play it as best I can. And that's including option trades, futures trades. The combinations are crazy. Now, let's take a look at the count because the SPX has the SPX itself, the ES, the spiders, plus it's built on everything that's lying underneath it and within it. And it's cap weighted. That's the other thing that starts to affect, right? The capitalized value, the values of our corporations will start to shift because the stock price is going to come down. So we had a lot of stuff going on. I don't want to focus on the war. I want to focus on where is your money? What are you doing with it? Where does it need to be? How fluid do you need to be? Shifting from one to next to the next to the next. Because trust me, if we're looking at a 9 to 12-year corrective process here in the equity markets, gold's going to go in one direction. So there's a money source. The bonds are going to go in a direction, probably both, right? We will have to have lower rates. We will have higher rates. So there are going to be things to do in a shift. Don't just leave it all up to the bigger people. There are trades that are going to happen. And if you're going to become a trader, well, again, I'm going to tell you, trade. Because it's going to become very, very important. So whatever you're choosing, for me, it's going to be options. Trade where you're comfortable. Trade what you're comfortable with. Trade where you understand what makes it tick. What motivates it? Where does it jump? Why does it jump? I mean, we could say, oh, we had these numbers, these economic data come out to the PCE index. Did you notice PCE got reported and nothing happened? Because I think people turned off the algorithms. We're not doing that again. Did you think about that just for a moment? I actually think that that whatever trading firms run those algorithms to capture something, then we're not doing that today. The reaction, and then because they knew that they were going to sell. And the PCE, I don't think really came out sour. I don't think any of the data actually pointed to a sour picture. But when we started to sell, I was like, there was nothing that was going to stop it. So when it came time, it's like, don't you dare turn that thing on. No, we don't want to be having to cover what that silly thing did on the way up. Because it did go up. So basically, here's my take. Option traders, do you think they didn't come in with a plan? The plan is if we do go up, if the numbers do come positive, we will monetize this, and that. If I'm a dealer, I'm going to be looking at where my trades. It's expiration. What do I need to monetize? And if you're a dealer in Apple and AMAT and AMD and Amazon, whatever the case, whatever those stocks are, there's dealers in all of them, folks. And they're making bid and offer on the options and trading. So, things to do. So be a part of that. I don't know, you can. But I think have your plan. Have how you're going to trade. To be honest with you, people want to come in and tell me I'm nuts. It's like, that's okay. You can tell me I'm nuts. I know what I'm doing. I know what I'm saying. I have my experience. If other people don't want to believe that, well, that's up to them. But each one of us has to take the responsibility for our trades, for what we do and how we do it, and what we want to accept and what we don't want to accept. So the only thing I actually do, is I will defend my analysis. I will defend my work. People saying, well, I'm always looking for the upside. No, 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 no. I am not bullish. I am not bearish. I am playing the market. So to be dead honest with you, as a futures trader, I do not care if it goes up or if it goes down. I just want to make sure I can count it and that I can understand my indicators. And when they react, I can react and make money in the market. But lately, it's been possible, but you get swung around now. So we're getting, as a trader, I'm seeing signs of total discomfort, total disgruntled traders. I talk to a lot of traders and they're all like, it's like, yeah, this is ridiculous. You go in, suddenly you're up 500. Next thing you know, you're down 5,000. And that's in one flip and a turn. And I'm not joking. Maybe the whole thing took 30 seconds, 45 seconds or less. And you're suddenly down. What do you do? Well, if you're not big enough, you're going to have to get out. But if you're big enough, maybe you hold and you add, and then it comes back in your favor. But the uncertainty that it will or it won't is there. Why? Well, because volatility itself is expands for that second. You hear me? I'll talk about it in terms of like there's a vacuum. It's something like a vacuum. If there's been a lot of selling and selling and selling and selling, and suddenly out of nowhere it stops, and then you get this 10 or 20 or $30 in the NASDAQ pop. And you're like, wow, what was that? Oh, somebody just needed X amount of shares of Apple, X amount of shares of some stock, and it'll throw it up there. Depends on which stock it is and what the weighting in the index is. Now, a lot of people, well, I don't really care about that. It's like, you don't have to, as long as you realize that it'll go up and may not stay any longer there than a few seconds, and it gets tossed right back down. That's what I'm talking about. This is some of what we're seeing as the trading. So I think that starts to increase. So there would be plenty of opportunity. Options, there are a lot of things to do. A lot, a lot, a lot. People are already there. They're not caring what the overall opinion of the market is. They're in there every day between strike prices. And what's their window? They might have an iron condor out that has puts up, puts below the market, calls above the market, and you know, you're hoping, that they're going to meet in the middle, and you collect everything. So anyway, let's go over this count. I believe there's a lot that's going to be going on, but please do your math. Run your numbers, run the potential for what the market may do. If you got fibs, I can add a fib here that'll go from the top of minute wave 1 to the bottom of minute wave 4, and it's going to show you 71 something. And that's just a fib number. It's math. And if I'm doing Elliott, if we were to move into a fifth wave going up, and that would last at least until the cash breaks this, which is 65.22. Starts going below 65.22, or chances are that it's not. But I'll tell you what, I need to kind of go out. I need to get up here. Now, what I've also talked to you about is that the market, once we do start to go down, it tends to go to fourth waves. That's where I think we find our pockets, our moments of support, are at fourth waves as they're laid out. So when we start to break this fourth wave, it lifts the possibilities like, well, where's our next? Well, there's another fourth right there. That's at 63.60. So here we have 65.20. I'm going to call it 65.20. If we break, well, our next pocket of support, just in terms of a point in a chart, is going to be around 63.60. So we can figure that, right? And then we have one more that's at the bottom of that thing, which is at 62.12. So you've got, I talk about if it breaks 6,500, there's a fair chance that we can go very quickly down another. We break 6,500 and we can drop 140 S&P points pretty quick. That just takes us down to 63.60. And then if that breaks, well, then we have the potential to go another 110 points. If we start breaking, well, we have it. You'll see it starts to broaden out a little bit. Now, this is 62. This is 6,000. Now, in the SPX, we've had a gamma level sitting down there. I believe it's still large gamma 1, to be honest with you, sitting down there at 6,000. Just sitting there. Are they going to move that? Are they going to roll that? All right, because those are probably, because it's large gamma 1, it's likely, it's not because I think there's a crap load of calls, but there might be. I think it's got to be shorts, and it could be in the puts, and from a long time ago. So, but again, short calls, 6,000. So they got value. In any case, that we have support, 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 6,000. Well, this is actually 58. And then finally down here, and that's at 48.35. Now, 48.35, April of 2025. Well, I go so far down. Really, April of 2025. We're almost a year. Could that be something? I want to talk about that one now. A year later, so on April the 7th, are we going to bottom again? On March the 31st, are we going to bottom again? That's pretty close itself. That's pretty deep. I do think that we can bottom somewhere around 65, maybe as low as 63.50. Maybe. And that just brings us into a low to where we can rally back up off. Maybe that finishes the wave one coming down and we get a wave two. I'm also looking for clarity and structure. This wasn't bad. At least you can count the five. This is one big cluster, you know what. And it has been nasty and difficult because they're all threes, because they have truncated fifths in places. It has been pulling out every tool that you have in terms of Elliott, double checking to make sure, is that still okay? Making sure you're not really breaking anything from anybody. And it takes a lot because there's a whole bunch of we can call this, but I'm going to be calling this. There's one, there's two, there's three. We've got a four to go, back up, and then back down. We still, if we're just finishing wave three here, I think maybe a little bit more to go, but everybody's going to fly through the floor. It's like this is a diagonal. This is a small wave three in comparison. It's a minuet wave three of a minute wave one. Here's minute wave three. Here's minute wave one. Pretty big. So again, we just need to kind of be patient with it, realize where we are. Yes, we're going to have a decent, we should get a decent drop. Our next stronger support remains at 65.22, or you can say 6,500. But it's going to break that first. And if it does, it could shift it over, like I talked about, but I think it puts another nail of confidence in this being all done and we're dropping in that larger degree. Now, it's going to take time. We're in the baby steps. They're still big. And as a day trader, they're still big. So a lot to do. Just keep it all in mind and allow for the potential. Could be nothing more than just a shift up in the second wave, but we might go all the way back up, depending on what your positions are, depending on what you can roll out, depending on what you can trade. I'm not asking you to change your mind. I'm just asking to trade. There's going to be a lot to do, and now we can step in. I don't. It's yeah. A lot of people, well, I'm short puts. I got the puts going, and I'm just going to sit and wait. If you got puts, trust me, they're born to go to zero. That's number one. They're created to go to zero. They all have premium in them. So you may have bought it, and it may be even in the money, but it's not making you any money. Or maybe you're down because your expiration is March. So you need to roll. If you're going to keep those puts and you want to make money on them, you're going to roll them. You better roll them. So you got to sell those. And the thought process would have been to sell it with a little bit of premium in it because you're going to have to buy premium moving out. So again, I just think trade. That's where the opportunity is. Not in trying to tell somebody that it has to go down. It's going to go down. It's going to, yeah, it will. But at its pace right now. And we may walk in. We could walk in on Sunday, and again, we get a gap down. Maybe on Sunday, we gap down. Maybe we gap down 200. I don't know. But by the time the SPX opens on Monday, maybe it's down 100 or maybe it's up. Doesn't mean it's going to stay there. Okay, so let's just continue. So again, I'm looking for the fours. And I think there is where we could finish like either a minor wave one or even I don't think I want to go up to intermediate wave one, but we could if we're going to get five waves on an intermediate degree. Because again, five waves on an intermediate degree, and now we're looking, well, take it back out. Let's go to the 5 year. We're looking at we could get down to there. That intermediate wave A or intermediate wave 1. Again, this though is 3,500. So again, but we're still looking for much lower levels over time. So I think this, how long did it take us? It took us almost a year. So let's say 11 months to get, well, not even, let's say 10 months to get to the high. So that's from April. So it took us 10 months to get to the high. How long should it take us to get back? You know, the old stocks go down faster than they go up. So maybe it'll take us, I don't know, 3, 4 months, 5 months. So what are we? We're into all kinds of third quarter, fourth quarter. So I'm just going to try to play it. And that would just be here. That's not like the world is coming apart at the seams, although it's going to feel like it. And for some people, it might just be that way. All right. So back down to my 4-hour chart. What can I look for come Monday? I believe, again, depending on what develops in the Middle East, we have a weekend. What kind of develops on a lot of fronts within it, but I think it's all going to swirl around the Middle East right now. Oil. And we can notice that oil closed just below 100. So it had dropped all the way down to 85. That pushed the rally, by the way. That rally came overnight and then really kicked in early as crude dropped from like 100 to 85. Nah, it didn't even go that far. But I mean, it went to 85, but I don't think it was up that high. So, but now here we are back around, just looking at 100 again. Dollar is back at 100. So that should have a negative effect on gold, and it kind of did. But I think those are corrections as well. We'll be going over those. So now, S&P 500. I think depending on what happens, we have the ability to slide through there and continue lower. Now, what we can say that if we're looking, I can put it here to here to here. This is all for wave 3. Well, you can see we've come down almost to 1.618, which is 65.93. So on the low today was 66.23. So we have another $40 here. I think that would be a small little give. But then we have 63.71, and that still would be a wave 3. But that's why I've kind of left it open, because you would think it's like, okay, we have wave 1, ABC wave 1, ABC wave 2, A, ABC, B, C. So we get but if we're going to get a 4, it should be a decent bounce, to be honest with you. And maybe back to like 68.30, which is 200 points from where we are. And you're going to wonder how and why would it do that? I don't know, because it's a number. So, but the potential is there, as is the potential for the market to drop 200 points or 150 points or 120 points, whatever you want to call it, from there to there. And does that really shift the narrative? It keeps it in a third, and because it would be wave C, and that's, oh, I can really show you, there you have it. That's wave 3 would be 1.618 times the length of wave 1 here, 2.618 times the length of wave 1 here. Not unusual, not impossible. So we could have a pretty strong down day. I have to tell you, as a futures trader, I want the push-pull to just all be one direction. Like everybody's getting out. It's okay to sell it. and then buy it back in 10 seconds for $4 lower or whatever. Okay, so we have that potential. If we get the turnaround, then this 3 can go there. Then you change, and now you're looking for here to what we can get in a fourth wave. And let me just go like that, put this, and go down to here. So you can see we can get back. That's what I said, 68.23. 786 is 68.77-ish. And what it can't do, right? If 3 is here, 4 I would not expect wave 4 to take out the starting point of wave 3. Could it? Nah, I don't think so. I think wave 4 should be an ABC of its own, but maybe 50%, maybe 62%, but I wouldn't be looking for a whole lot. Simply because it's got to, I'm connecting 2 to 4, not 2 to itself, not 2 up here. This is a diagonal. It must continue to form that diagonal. So the wave pattern, the pattern of the market would not suggest that we go up and break this boundary. We adhere to it. We have other points in between that should also assist. And again, we'll see how much gamma expired today and what's been moved out and where's it going to end up on Monday morning. That'll be also important. So, but I think, yes, if it's a 3, if it's ending and we're going to turn higher, we have 6,700, 67.58 to 60, or 50 to 60. And then we have this level, which is 67.85-ish. So all below 6,800. So that's kind of what I'm talking about, moving the level down. That's kind of moving the level down. If the market's like, no, we're not going above 68, because then you're going to attract a lot of, I think, not pushing higher. You see that it just turns. That would be my take. So we're looking at that. So the possibility, yep, we can go up in a 4, but then we still have a 5 down. So, and I think the 5 can break the lower boundary. And then we'd be looking for that to be minute wave 1. And then we have a minute wave 2. So wherever it stops, you're going to run your fibs from here down to it to get your fibs coming back up in wave 2. So wherever minute wave 1 comes in, you're going to tack it to the high of minute wave 5. And then you're going to get for your minute wave 2 back up. Okay, I'm going to stop. Thank you very much for listening today. Just as a note, I am continuing to work on the live stream, and it is going to be membership, and it does affect memberships. I will be coming out with a video once I have the details. Once I can get together with YouTube to make sure that everything I want to do, I'll be able to do it. So that's what's going on that front. But it should be exciting. I'll have myself, who I will be giving the morning updates for the S&P and the NASDAQ there, live, and and then also trading together for the first hour and a half in the future. But also have somebody coming in who is really good with options, also works very cleanly with gamma levels. So then if you're having to be trading in stocks, but you're trading the options, well, you're going to get somebody that's going to be able to tell you all about call walls and volatility triggers and everything else within the individual stocks. So it should be very exciting. And then again, I would probably leave the live stream on for the balance of the day for people to be there together and to be able to talk in terms of just with comments. So a lot on the horizon trading wise, a lot on the horizon to help us to get through all of this noise by trading. All right, next update will be Monday morning.